What is going on, guys? Today I have a very awesome video for you. We are going to be talking about Alibaba stock. We are going to talk about what is going on with that stock. It has been on a wild roller coaster recently. It's got up all the way to $120, 20 plus, and now all the way back down to like $100. So it's just making 20% moves, 15% moves over just a couple days. So we're going to talk about what's going on with the stock, what's kind of changed over the last couple days, and why the stock is basically back down to around $100. So if you enjoy the video, make sure you hit that like button. And if you want to see more videos like this one, make sure you hit that sub button. Before we get into this, I have to touch on this news. So the CPI report was released today and inflation rose to 9.1%. In June. So year over year in June, it was up to 9.1%. And I keep seeing these articles saying this has got to be the peak. We are about to peak out. I saw them say a month ago, 2 months ago. Every time the CPI report is about to come out, there's articles about how we're about to hit a peak. And then the number just keeps going higher. So I don't even know what to say about this anymore. I'm kind of done talking about inflation. It's just kind of, nobody knows what's going on. It's just crazy what's going on. I would not be expected if we see a rate increase of, the 0.75 again with this news and the Fed, wanting to crack down on it more and more. So they'll probably overreact and we'll just see what happens, So again, that's not what this video is about. But overall, I was kind of surprised because the market reacted very just bland, just didn't really care. It was down in the morning quite a bit. And then just throughout the day kind of recovered back. So it's kind of weird things going on. I'm wondering if over the next few days, we're actually going to see a drop just because it kind of recovered back. And it doesn't really make a whole lot of sense, right? That should be seen as very terrible news. So we'll see what happens. But anyways, let's get into the Alibaba information. So let's just take a quick look at Alibaba's chart. So right now we're sitting at $109. And if we look at the last 5 days, we can see that 5 days ago, we were at numbers over 120, all the way up to over $125 on Alibaba stock. And obviously something changed. So over the weekend, we had a report come out that we'll get into here next. Basically a very brief overview of that report. And the stock just fell. The stock just went all the way down to $100. And this is kind of where it's been at for the last month or so. It's been kind of sitting around, anywhere from $100 to $110. And then over the last, couple weeks, it kind of spiked up as, some of those concerns kind of went away and the market started to recover a little bit. But, it's been a rough past even 6 months. Down 17%. So it was way even higher than where we're at. It was 130 range. And then over the last year, it's just been terribly down. So it's down to down over 45%, up to 48% there. And that's even not the worst of it. So there, if we're looking at the year chart, a year ago, it was only at $200. And if we go back just a little bit further than that, this stock was well over, or a little bit over $300. So Alibaba is basically just getting crushed by the market right now. And we've seen the concerns over and over again, basically a lot of them having to do with China being delisted, regulations, all those things going on. And we were finally starting to see the stock turn around, and it just has taken another hit. So what happened to cause Alibaba to go down so much? Basically what happened is over the weekend, we had the Chinese government step in and impose new fines against Tencent and Alibaba. So this is huge. The fines are actually very insignificant. They aren't going to have really a big effect on the business, but it's huge because what it means is the Chinese government is getting back involved in a lot of these businesses and basically regulating them in ways that, the US investor does not like. And the reason these fines are coming into play is basically what we have here. So China imposed fines on several companies, including tech giants Alibaba and Tencent, for not complying with anti-monopoly rules on disclosure of transactions. So basically the Chinese government is saying to Alibaba and Tencent, that they are overstepping their bounds. They have created a monopoly on the industries that they're in, and that they think they need to basically find these businesses to, help level the playing field. So the Chinese government does a lot of that, where it tries to level the playing field and kind of force, capitalism to happen. And basically by trying to bring the large players down and then use money to help kind of promote up the smaller players in the industry. It's kind of an opposite approach to how the US has done it. The US actually just forces companies to basically disband. So we've seen this happen multiple times with AT&T, where AT&T will actually grow to too large of a business, and it'll encompass too large of a certain industry. And then the SEC will step in and say, you need to break up into smaller businesses because you are too large of a player in, said industry. So that's kind of a different approach to it. Honestly, China, I kind of get the feeling that they're just more about the money. They kind of just want to pull this money away from these companies and use it for, whatever government, funded policies that they want. But I couldn't tell you for sure. That's just the feeling that I get from it. So a lot of investors have similar feelings. They're seeing this as kind of unneeded regulation. So they are, seeing that and basically taking the approach of, we don't want to own Chinese companies because they're still regulating and trying to basically hold back a lot of these companies like Alibaba, Tencent, from the growth potential that they do have in front of them. The last thing I've highlighted up here is kind of an interesting comment. So casino stocks in Hong Kong plunge following news that nearly all commercial and industrial businesses in Macau will shut down for a week in a bid to stop the spread of the disease. We'll call it that. So basically, I just wanted to point this out because it's very interesting to me that China is basically one of the very, very few countries that is still doing shutdowns and trying to stop the spread of everything through that mentality. And it's just interesting to me that they kind of still take that approach. I honestly do not understand it at all. I don't know why they would be taking that approach, but it's going to affect their economy massively, and it has. I mean, you've seen some of their numbers. So it's just one of those things to be aware of, especially if you are an investor or are looking to invest in Alibaba. A lot of this, though, in my opinion, has been priced into the stock because they've been doing this basically for the past 2 years, and any investor that's in the company now should be aware of it. And if they aren't, then they're basically ill-informed. So just one thing, again, if you are looking to get into the stock, that you have to understand that China has a lot of regulation over these companies. They force them to shut down, and they've been doing that the last kind of 2 years. So it's just, again, something to note and consider if you're invested or going to invest in Alibaba. So as I mentioned earlier, basically these fines are very insignificant when it comes to Alibaba. They have piles and piles and piles of cash. So you can see right now, all these are in the Chinese currencies, so CNY, and they're all in thousands. So you can see their current assets. You have 638 billion. Basically Chinese yen, and then in liabilities, you only have 300. In current liabilities, you only have 383 billion. So almost 384 there. So overall, they have plenty of cash. Again, even if you look at their total liabilities, they have almost what would that be? $1 trillion more Chinese yen for total assets compared to their total liabilities. They have over $1 trillion. So that's absolutely insane to think about. But you have a huge company that is basically throwing off a ton of cash. There's a reason they call it the Amazon of China. So overall, my opinion on Alibaba is, it's a good company. It's just figuring out how they can work and get along with the government, and then how basically the Chinese government can get along with the US government and the regulations that the SEC and everybody wants to have in place over companies traded on the New York Stock Exchange. Here I wanted to point out that some of the things that we're kind of starting to see go on with a lot of companies. So you're starting to see a lot of their PE ratios, their trailing and their forward, start going up, even though the stock price is staying down. The reason for this is, right, a lot of the expectations around earnings for these companies, they are going down. So, right, even though the stock price is low, as earnings drop out from underneath some of these companies, you're going to see the PE ratios kind of start to creep up. So that's one of those things that you have to, understand how the ratio works to really, make sense of it. But at a forward PE ratio of 13.77, I'm not overly concerned with Alibaba. I think, you're going to have the cyclical nature where you go through recessions, and, as long as a company has the cash to make it through, which we just saw Alibaba does have, then it's really just a temporary thing. They'll get back to, their earnings once consumers kind of gain some confidence, and any recession concerns kind of go by the wayside. The very last thing I wanted to touch on is basically the next big news that I think will have an effect on Alibaba stock. So obviously, if the Chinese government comes out and they talk about deregulation and working with the US government and blah blah blah, then that will have a very big effect on Alibaba stock. But the next real big thing that you can kind of keep track of, or to keep in the back of your mind, is their earnings report. So their earnings, as of right now, is set for 8/02, so August 2nd. And basically, they've moved it around a few times, and they never really stick to their dates. They'll probably move this forward or back. I mean, it could kind of go wherever, but it's important to basically keep an eye on this, especially as you're investing, because I would kind of expect this next cycle to be a poor one for Alibaba. I mean, it's the summertime. There's not a lot of people spending money, right? A lot of the holiday season, you start to see a lot of those benefits. So here we could see the stock fall out, be on basically poor earnings. We could see it kind of go down a little bit more. But I mean, I think, in my opinion, we've seen the worst of it for Alibaba stock. It's gone all the way down to like $85. So it's back up to 100. So I think that as some of these concerns get thrown by the wayside, as we start to sort through these things and the economy kind of starts to recover, I think Alibaba is going to be one that actually recovers very, very quickly and very, very well, as we kind of saw over the last month, because we had a small bump up in the stock market and Alibaba stock went up 15 to 20%. So overall, I like Alibaba for the long term. That's kind of my opinion on the stock, obviously, and I've owned it now for the last probably 6 or so months. Kind of averaged into it, so I plan on holding it at least for probably 2 or 3 years, as long as the stock doesn't get overpriced, in my opinion. But obviously I'll make a video if we kind of get to that point. So I hope you enjoyed the video. If you did, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. And as always, have a wonderful rest of your day.